Welcome back. You're watching the Mutual Fund Guide. It's all about your fund and your returns. Let's try and get one more caller. I think we have Santosh on the line from Mumbai. Santosh, what's your query?
Actually, right now my daughter is of 10 years, and after 10 years I will be requiring 1 crore corpus for his education.
Sure. Continue.
And so I want to query is that in which mutual fund I have to invest in SIP, and what will be the amount so that I can get a corpus of 1 CR. And after that, that is after 10 years, around 2-3 years more, you can say 4 years. That is from till now to 15 years. I want again a corpus of 2 CR for its marriage.
Okay.
So this is my query actually.
Yeah, so I think you have set some very important goals, education and marriage over a period of 10 to 20 years, 1 crore and 2 crore. That's the kind of expectation. Pankaj, what would you advise him?
See, first thing, because your time horizon is quite good, 10 years, and after from 15 years from now means you have 2 goals of 1 crore and 2 crore. But long term, see, again, you'll have to have higher allocation equity, because one is your target is big. Second thing is because you have good time horizon and this equity is more suitable. So, and you want to start investing through SIP route. So I'll say that right now, if 80% to 100% you have equity allocation, it is good. And but when you are close to your goal, when you are nearing your goal, that time you should have more allocation in debt, which will provide stability to your portfolio. And here, if you see amount wise, you'll have to start with a big amount, say 50,000-60,000 per month, if you have 2 goals. And that also you'll have to increase year after year at least by 10% to reach to that figure. So start with the whatever amount, means because we need to know many things like what you can afford to invest every month. But because target you have provided us, so if you see the calculation, it is a big amount. If you cannot start with a bigger amount also, not to specifically to you, but to anybody, see, start investing. With time, keep on increasing your investment amount. It's good that you set a goal, and goal should be a big, because we know that with inflation in future you will require bigger amount. Start investing, keep increasing amount. If you have 10 year, 15 year, definitely your salary will increase by many fold during the time. And scheme wise, I'll say that you should have allocation between large cap, multi cap, mid cap funds. Some consistently performing fund like ICICI Prudential Focus Blue Chip Fund, which has been in the market for many years and has been performed well. So you can invest in this fund. Aditya Birla Sun Life Advantage Fund is one multi-cap fund. Aditya Birla Sun Life Pure Value Fund can be a good mid-cap fund. SBI multi-cap fund. Again, if you are investing in 5-6 fund, one scheme you can add Mirai Asset Emerging Blue Chip Fund. That is one good quality mid-cap fund. So keep 5-6 fund maximum in your portfolio, but have allocation between large cap, mid cap and multi cap, and maintain discipline. Keep increasing your SIP amount as much as possible. And second thing, whenever you have lump sum amount, sometimes it happens that you get bonus, you have some lump sum amount available with you. So in the same scheme, add to this, which will help you achieving your financial goal.
Okay, we have one more caller. R. Malik is on the line from Kolkata. Malik, welcome to the show. What's your query? Hello.
Hello.
Yeah, continue with your question.
Yes, I want to ask that I have 2 yield funds, SBI Magnum Yield Fund and GSEC Fund, Reliance GSEC Fund. I have been holding them for the last 6 months. Should I hold on to them or should I sell them?
Yeah, Nikhil, would you like to answer that question?
Yeah. So what you have invested in, both are government securities fund. So this fund invests in government bonds. Now both this fund invest in long-term government bonds. So they buy government paper which are maturing in the next 5 years to 30 years. So normally this fund have an average maturity of around 10 to 11 years. Now what you have to remember is that whenever investing in debt fund, you are subject to interest rate risk.
Right.
So what is the relation with, is that if yield goes up, price goes down, and if yield goes down, price goes up. So in last 6 months, you might have seen negative return or a very, very low return in your portfolio. The reason being is that in last 6 months, the yields of government bonds has gone up. That has gone up primarily because of a couple of reasons, that there's no reduction of rates by RBI, and second primary reason is that in terms of government expenditure is more than what was expected. And because of these two reasons, and the GST collection has been lower than what was expected. So because of all these three factors, the deficit of government has gone up, and because of the yields of government bonds has gone up. And if yields goes up, the price of these bonds comes down, and accordingly portfolio value comes down. So currently the yields are already slightly on the higher side. I'll say that in this conjuncture, just hold for another couple of more months. So it's expected that if the deficit number is lower in the budget number, or is slightly lower than the expected number, or if there's some other way of revenue collection for the government, then the yields may slightly ease down. In that way, you can redeem the money. But if you clearly look from a 3-year perspective, the government bonds may not be a great option to invest in, because in the next 3 years, the interest rate likely to go up as compared to going down. So you may not make that great return in the long-term government bonds. If you want to put money in debt, whether be in credit funds or be in short-term debt fund, that's far better option as compared to being in long-term government bonds.
Long-term